Hi everyone and welcome to the very first episode of a special series by Infinity Learning Space, where we help you crack the SL05 June 2025 case study. This episode is a part of our ongoing effort to help you decode and master not just the pre-seen but also the unseen with deeper academic and professional insights. Today I have a panel of powerhouse panelists with me here today to share their insights and interpretations and also exam-focused guidance with you. So just to very briefly introduce with them, I have here today Professor Ravi Dissanayake, a leading voice in case study and strategic analysis, Ms. Yashika Dissanayake, expert in financial management and performance evaluation, Mr. Suranga Indunil, specialist in governance, risk management and sustainability, and Ms. Nayananjali Jayasekara, expert in advanced taxation. Now, before we dive into that very intriguing panel discussion, let me take a couple of minutes and walk you through some of the key highlights from our case study. So starting off, our case revolves around Hayward Logistics PLC, a long-standing diversified logistics service provider in Sri Lanka. So as you can see, Hayward PLC has a legacy dating back to the 1870s. What started as a small family-owned company has now grown into one of the country's most integrated logistics service providers. So these services vary across freight forwarding to maritime operations, to project logistics, to inland transport, aviation services, as well as one of the most strategic free zone facilities also managed by Hayward PLC. From a strategic point of view, Hayward aims to position itself as a one-stop logistic provider for most companies, and its reputation is built on its asset ownership, its scale, and also its broad service portfolio. However, the company seems to be facing some of the challenges, which seems to be some from external pressures as well as some from internal operation challenges. So as you can see, one of the external challenges here is the fuel price volatility, and also since diesel account to about 30 to 40% of the direct cost for Hayward, it is a big concern. Moving on, we also have the foreign exchange risk, where the dollar-linked inputs are also coming into Hayward. Also, another external pressure is with the tightening ESG regulations with the IMO emission rules as well as the EU carbon taxes. Finally, Hayward also has a lot of competition from some of the larger regional players. Now to look at some of the internal operation failures we see during the past years, that there have been some warehouse discrepancies, as you can see in page 3, and also a vessel detainment and some penalties due to a delay in a government project. Apart from this, we also see that there are some financial limitations with a drop in revenue from 2023 to 2024 and some working capital strains. Another key pressure for Hayward PLC is the possible consideration of an acquisition on top of these financial limitations. So, with these key highlights for the case study, we would now delve into our panel discussion with our panelists. So next, we'll be tapping into the expertise of our panelists to help us break down some of the key incidents and themes of the case study. So, before we move into that, let me just jog your memory in some of these key incidents that have been discussed in the case study. So, if you were to move to page number 10, on to the section on the Hayworth Logistic Free Zone, this is seen as a strategic asset and a core differentiator to the company, as it has helped the company attract many international clients. However, there seems to be some challenges with operating this, where the COVID period has led to a drop in revenue, and apart from that, there have been some delays, inefficiencies with managing lubricant imports. Apart from this strategic initiative, there is another key strategic theme that is brought to us in the case study, which is regarding a possible acquisition and entering to the e-commerce sector of the logistic industry. So, in an attempt to diversify, modernize and digitally transform the company, Hayworth PLC is considering acquiring e-com solutions, where e-com solutions is a growing e-commerce logistic service provider with strong profits, agile operations as well as advanced technology. This acquisition it comes in two ways for Hayworth, where it is a strategic opportunity as well as a challenge in terms of digitally transforming the company that could define the competitiveness of the company in this evolving logistic industry. So, I would like to direct my first question to Ravi sir. Sir, you are a professor in strategy and also an advisor to many corporates. So, how would you assess the current strategic position of Hayworth in the logistic industry?
Exactly, Jason. Now, if you looked at the case study, I think before I just come to your question, I will give a little overall approach.
Sure.
How chartered accountant, that could be the outcome of this professional course as well, should look at strategy in terms of the 360-degree approach. So the purpose of this course unit, the case study, of course to check whether the applicant has that 360-degree approach of strategic thinking, not functional thinking, like accounting, finance, taxing, no customer service, marketing, not like that. So therefore, my first advice for the all potential students, obviously we are going to give them a real insight and real direction in our future programs as well. First, summarize your case study as a norm of storytelling. When you looked at storytelling, you can see the first page to the last, including some of the annexures. It talks about transformation story of a company, where the main incident, students should understand whether this incident connects to functional matter or strategic matter. For example, if you looked at how this company operates as a 3PL and how they have gone for different macro factor and the micro factor influences, what the remedial actions company has taken. Some went okay for a short term, but in long term, it did turn around with the negative results. So you looked at whether this is a responsive strategy or whether it's something functional action. So the first thing they have learned up to this level, all the course units related to different functional areas. Now students should get ready for the mindset. We call it as a case study in language, we call it as protagonist. If he or she happen to be a part of the company, how the person should look at strategic incidents, operational incidents, where you very nicely explain the abstract format of some of the incidents of the case study. So my advice for students, looked at one example, they happen to go for digital transformation, but one of the strategic actions they took was acquisition. It is strategic decision. Now the question you directed to me, the current strategic position analysis. Okay, before we come to that, digital transformation is one of the avenues for that. Their strategic position, we should look at in the level of industry format. They are into logistic industry. In logistic industry, supply chain is a bigger scope. Logistic part comes as a value added scope within that. So you can see their major functions and how their clientele or segments they have transformed into different types with the time being. Starting from the sea and then air and then the lands and of course the free zone strategy what they have taken. So these are called strategic drift or strategic diversification. But for the student, I must say, in our future sessions, we will further talk in that, giving more focus and directional approach. Their diversification position compared to the other industry players is framed to related diversification, what we call concentric diversification. So that's the first comment we have to make. So if you looked at the all incidents took place, wherever they talk about the positive results in the short term period, like short term, not rather short term, mid term period, wherever they happen to face for the macro factor challenges, they were hit seriously, especially a global crisis, even local government influences, and of course interim factor challenges like fuel price. So strategic position number 2, their value chain position is not having very much competitive advantage. Why? The reason is, one side, maybe you have looked at in different angle, financial angle would be little different to my thought, but we had looked at in a 360 approach. Their value chain more or less in-house operated until they have gone for that decision of acquisition decision. So that's another strategic position analysis, how far company has diversified their value chain operation with strategic partners. That's how I have seen their strategic partner involvement for their value chain is not competitive. Enough evidences you can find. So for the students, what I say is rather limiting to the case study and the insights, because this is pre-seen. We have enough rooms to do some modification for the case study when they go and sit for the exam. Better read one or two leading logistic companies in Sri Lanka, see their conglomerate, how they have diversified. Then you can easily understand how competitive their value chain operation is. And the last one in my first round of discussion, I want to say, this company, for the period of X number of years, they have come to the third position, where you have seen the 28%, 22% for the first and the second player. It means lion share is 28%, and this company has 18%. And the second player 22%. You can see 4% of difference. So 50% has been shared amongst first one and second one. So strategic position, third one is a market share competitiveness of the organization. They are bit of vulnerable against the leader shares, because second one and the third one, first one, second one, 50% absorb. So this company has to play with either first or second, or else. So that's where the information and of course the future thinking of students should focus on, or else for the future to get into the number 2 position, that 4% of share difference, they have to look at their strategic position against fighting against first and second player, or absorb the share from the 4th, 5th or 6th players. That's also strategic position they have to look at. So in my first round, I want to emphasize these 3 areas as critical strategic positions for this company to look at. It means the students, they should act as internal parties of this organization if they want to analyze their strategic positions. So these 3 are the major areas to be analyzed.
Just to reiterate on like a key tip you mentioned, that is not just to stick to the case study pre-seen itself, but also to do their homework, their groundwork, to see what else they can see about this industry and learn, so that it will help them in the case study exam itself.
Exactly. If you permit me to quickly add something. Now, why I said so, even this case study, the well-written one, and giving enough invitation for the readers to get ready with real-life industry insights. Some companies case study mentioned are actual companies. Just looked at. We are in the Google leader now. Just go and search.
AI.
Definitely AI, but still I believe HI is more powerful than the AI. They have to look at see the real life companies, how they have diversified. For example, John Case. Even this other two leading companies they mentioned over here. These are diversified into both concentric and conglomerate diversification, or related diversification and non-related diversification. So they have diversified the risk factor even. So this company has gone to the vertical approach, not the horizontal approach. Horizontal, different industries. So where you can absorb the risk, where you can, do the transferring of your assets and the cost and the revenue, all these related matters within different industries. So if you looked at someone in a broader view, that's also long-term strategic analysis whether this company has shrewdly diversified their companies into different industries. Of course, last part of the case study, it provides some lights to do that. So best thing, don't limit to this case study, be eye-opener and see how industry actually operates.
Understood. Just to following up on that, how can you advise our students to have an integrated mindset when building their answers in the exam itself?
Exactly. Now, because I have to talk as a mentor for this case study subject, not only for this one. So many programs, locally and internationally. Even when we prepare the model answer, we normally have a norm to give reasonable marks when student write answer in terms of the framework of solutions. Remember, case studies, you are not writing answers. Case study, you are writing solutions. So when you write solutions, you shouldn't develop the answer within the functional framework. For an example, I can't say exactly it will come, but we just looked at as predictive mindset. What are the alternative strategies to redesign the value chain operation of this company? It is not the typical, primary activities, secondary activities, and you're going to talk about how to improve this logistic part, outbound production, operation, and minimize the cost and improve the quality. This company has started with the competitive advantage of cost efficiency. So their value proposition is cost. And if we happen to give an answer for the value chain modification, because enough evidences it has given, why not going digitally connected? So adapted value chain approach could be the best answer for that. The adapted value chain approach, you need to talk about how technology comes as a platform, how to get the strategic partners involved with the shared approach for the organization. It doesn't mean the shared in terms of the capital ownership, but for strategic integration. So students should write answers, technology, digital transformation, and the functional areas, and answers should come out with the in light of how that would make solution for the business model. The key word I want to emphasize is business model. So this vocabulary we are expecting as examiners. So then we will understand the student has the 360-degree mindset, integrated mindset for answer building. It's not you are writing as the functional approach, functional answer. Something about the cost efficiency, don't write only, operation efficiency, cost minimization. No, that's one side. Why not you think about getting outside partners involved for cost efficiency? Use the right vocabulary, literacy must be there. So then we will understand student has broader mindset for a case study approach.
Okay, thank you, Ravi sir. Drifting a little bit towards Ms. Yashika, so you worked with a lot of corporates in strategic finance roles. Will you be able to share with us, from your experience, how can strategy and corporate financial management connects in specific decisions, especially when it comes to like strategic decision making?
I think it's very relevant, Giza, because I think historically and experimental wise also, through our education, we have learned those two quite separately. So why there is fundamentally an integrated case study is also to, from a candidate perspective, if you look at, to see whether they are capable of bridging those, right? Now, what is strategy is what when company decide where they want to go, the path, the method, and what is financial management, as we historically know, is we have limited resources financially. You can be measurable, immeasurable, whichever it is. So whether it's quantitative or qualitative, the resources that you have as a corporate, as a company, is something that you have to wisely devise of, right? So when company sets the strategy that this is where we want to see in short term, medium term, and long term, it's imperative that the financial management, risk assessments, governance, they all come into play, which also forms a larger part of the finance we call the corporate finance. So that's not any rocket science. When people sometimes say, I want to be in part of corporate finance, but I don't want to practice in finance. So that's a kind of misconception they have. So it's also a broader branch of finance. Now, where it links, especially in a case like this, now see the industry that it operates. It's very capital intensive, right? Logistics. Now, when you look at, I think, page 24, you will see the balance sheet is huge, humongous. And also when you look at the real examples in life, like CASriLanka's, Haley's, John Keel's, they're one of the leading freight and logistic companies that drives a bit of the industry itself as for the company, as for the country, as well as for the region. Now, how would you match your strategy in financial management? Number one is you have to set the scarce resources or the limited resources to achieve the best of your strategy, whatever the time span that you work with. Now, in this case, I think page 18 talks about an acquisition, a potential acquisition. And when you look at that consideration, that is huge as about 23 to 25 billion, right? When you look at this company's balance sheet, it's, I would say, if they can go for the acquisition with all the pros and cons quantified and would be nice, would be best, but can actually the balance sheet supports it without drowning the company itself with its own weight, right? So that's one thing. So one thing that candidates must understand, when a company sets a strategy of diversifying or consolidation, merging, or any other factor, whether financially are we able to do that, right? Now, second thing is we will, when I say we, I represent the finance industry. Finance will set certain KPIs that will give you indications. We usually call it governance internally and externally. So that will give an indication whether company can do such great work within the time span of the strategy set. Or now, for example, let's go with the same acquisition. Are we going to go with equity? Now it's PLC itself. Are we going to go ahead with another right issue, or maybe some debenture issue, or even some added shares issue, right? Or are you going to go with debt? Already there's about 28 billion debt liabilities in the balance sheet. So are we going to heavyweight on our balance sheet liability side? How are we going to, if we want to go with acquisition? So those are certain things that you have to sort of weigh, and I would say that roadmap to your strategy has to be mapped with certain financial resources that you have without overburdening a company. And also the other thing is in a different perspective. I think finance had certain forecasting tools. We will be discussing a little later on that. But to touch base a little bit now, we have certain forecasting tools. Then also we can do certain sensitivities and see, and especially now in this industry, I saw they are heavily exposed to the macro factors, two main macro factors. One is their exposure to the oil prices, and about 40% of their operational cost is fuel prices. So how to, now their cost is quite thick layer, the fat layer is very thick. how you can reduce it, because the more you reduce your cost is becomes your bottom line higher, right? So how would you do that? And that's something, a macro factor. How would you achieve that? And the other thing is the exposure to the or I would say the negative exposure to the dollar rupee depreciation, where we are a soft currency, we will be depreciating, right? So how would we tackle that? Now those things will come in handy with finance when you set together with a strategy.
I think those examples you dived into will be very helpful for our students. And in a nutshell, so finance and strategy cannot be looked at in isolation. It goes hand in hand. And finance is weaved into that strategic decision making.
That's right.
Okay, thank you, Ms. Yashika. So turning to my left, I'm going to direct my next question to Ms. Nayananjali. So as a tax lecturer and a practitioner in Sri Lanka and advising many corporates, I'm going to direct a similar question, but in terms of tax. Can you advise and assess the connection between tax planning and compliance and strategic decision making?
Yeah, Shita, the thing is, we cannot separate actually the tax planning separately and the strategic decision which the company will going to take. I cannot separate it, because if any decision that now tax is a strategic tool, then it's sometimes it's a liability, it's a burden, yes, but for decision making, even it's a financial decision, even it's which is on the mergers, acquisition, then whatever, for that particular decisions, then tax shall be embedded for that decision, because from tax the organizations can obtain the benefits. Then when it comes to, again, for this integrated case study in this mindset, but the tax and regulatory environment, it has embedded for the 10% of the area. Then first thing which I need to tell, that each and every decisions which like Ravi sir mentioned, and even it's expanded by Yashika, and for this all these things, that particular decisions, the students need to look at how we are going to include the tax decision on that, what's the perspective from the taxation on this decision. Then it's integrated. Then that's why, which I have first mentioned, it's not two separately, we cannot take, then it should be integrated. And while analyzing the financial factors, while analyzing the strategic factors for all these things, and sustainability, governance and everything, students need to add color by putting what is the tax implications on this decision. Then in the case, if we have taken, there are a particular operational issues are there, and they have already taken the acquiring the separately, it's in the link with the business, they are going to do the acquisition. And again, which is the, like it has mentioned, foreign currency issues are there, fuel prices are there, revenue drop is there. For all these things, for pros and cons for both sides, how, especially in the decisions like the acquisition mergers, in that situation, how the tax can be helped to the organization. Now, if the company analyze the tax angle also, then if they can link it to their strategic decision and the direction, then of course, then it's a tax, it's not maybe a burden for them. We have the tax exemptions. I'm not particularly first mention about the industry, but there are tax exemptions, tax incentives, the concessions, then benefits are there also. Then the corporates, this company can apply that benefits in a wise manner and effective tax planning on the whatever the decisions they are taking. Then that's why I have mentioned the tax is a corporate, now it's a strategic tool which corporate can use not only to pay tax, but also mitigate their compliance risk and take the decision in a wider manner and embrace their strategic decision making.
Okay, thank you, Ms. Nayananjali. I think students need to have the broad mindset when approaching answers. Thanks again. So as we all know, Strategic decision making cannot 100% succeed without sound governance and risk management practices. So I'm going to direct my next question to Mr. Indanil. Can you please elaborate on how students can assess board oversight, ethics, and risk management when it comes to certain strategic decision making?
Right. Thanks, Jisam. First of all, I must say that I have been enjoying the session so far. We have Professor Ravi, who is an expert in case study. He has a separate PhD on the case. And the way he articulated how to produce answers, case you don't have, in chartered, we as chartered accountants, and Anjali, right? How chartered accountants usually look at, traditionally they say looking at numbers only, but this is looking beyond the numbers, right? Broadly about the company strategy, but who drives that strategy? If strategy is not going to work, the board is responsible. So board is on the top, and then there is a management. So this, the big point he made is about 360 degree without looking in isolation. How do you connect the core strategy with other functional and tell the story of the case? So then Yashika, again being a practitioner in many organizations handling treasury to risk, I think throughout our next few sessions I am sure we are going to add a lot of value, and again Anjali will deep dive into some of the issues. So from my perspective, I am not going to do a lecture, otherwise I will take 1 hour to do a governance lecture. But to tell your students, if you go through your study text, there are dedicated chapters on corporate governance, enterprise risk management. These are embedded to your syllabus. And then sustainability is such a hot topic in Sri Lanka. If you look at a rate now, companies are recruiting sustainability professional. Why? For top 100 company, this is mandatory from this year, and I'm sure this company is facing that. And not only that, there are a lot of other regulations in Europe. Now regulation, again, how it connects to strategy. You may have a strategy, but what are the implications? It's all about connectivity. So for sustainability is such a hot topic, and also we are glad to have an industry expert session in future. I think that's the market leading company according to this, right? So finance director will come and we can really deep dive into those. So therefore, I will very brief in next 5 minutes. Like I said, I'm not going to do a lecture, but to say students, how should you prepare with some framework. So what the first framework you see here is a framework for the board. So Jisa, you are also case student, right? You did the case study, right? And now a qualified professional, right? Now from a board perspective, I'm going to ask questions from you now. From a board perspective, right, what you can see here, a lot of people misunderstand the board of directors. What are they actually doing, right? I don't like to say what the hell they are doing, but the board, what are they actually doing? Then management, right? This is a very powerful framework to understand how board works. You can go to page 13. You see managing director is commenting that how volatility in the diesel price is going to impact. And we know, look at the numbers, how their revenue has dropped. They are under immense pressure due to a lot of external factors. So board, if they are going to, like Professor Ravi said, they can't now think about that internal value chain, right? How are they going to successfully navigate this challenging environment? So what you see in this diagram, right? How board is going to look at the business, right? The first is to be more futuristic, and then see looking ahead, right, in times to come. For example, how I'm sure Professor Ravi, even I learned that today, the concept of adaptive value chain. We were talking about Porter's value chain back in 80s, right? Now with the AI, right, how this is going to be transformed. And you can see the first role of the board is strategy formulation. Now, if there is an exam question to critique whether this board is more operational or strategic, you need to ask that question. And you can see it's future and it's not internal, outward looking. Are they looking global trends, right? Are they only looking Sri Lankan competition, right? What are the challenges? So look at outward perspective and future. That's strategy role of the board. And then to do all of this, now there is a debate about treasury formula. I'm sure Yashika being also a treasurer at a point, she will talk about, now you can't, now see one of the bigger risks they are facing is what? I'm questioning you now, right? You are the one who analyzed the case at the start. What is the first risk? Bigger risk? forex risk, right? Now, if you take that risk, being one of the biggest risks, we can put this in terms of a strategy, right? Which strategy? Now, out of all of this strategy, I have another slide I can quickly show you. There is a risk management strategy. When you have a business strategy, the idea of risk management strategy, if you go to corporate governance code and ask, board has one big task. They need to identify principal risk. If you don't manage, you will be out of the business, right? So then board define the risk appetite. So I want to ask the question, do you understand what the risk appetite for forex risk? Can they take a hit of say 100 million, right? Then they will go bankrupt. That's where the limits are set, and that is the policy framework. Now, when this treasury department is set, we can ask the question, have they formulated the policy, right? What is the governance mechanism, how the limits are set, and those are monitored, and that is the policy making role of the board. So again, strategy policy goes together to protect the company. You don't just go for a strategy, but you have a policy framework, right? And then obviously, normally, typically traditional board, they will do the business as they do. They don't think about future. Then they will only look at KPIs, what happened last month. That's monitoring, right? And then essentially, because this is a very powerful framework, you can write 2-3 pages if you want to give this advice in terms of the board role. This covers all the roles of the board, and I can benchmark this to any international governance code and say this is how it is covered. So the last part, the story you are telling to outside, that's your annual report, right? And investors will look at it. Now this year you need to account not only for fuel inventory but carbon inventory. Now look at the size of the emission they have, scope 1, 2, 3. So all of these things you need to connect together. Sustainability is a strategy. If you look at IFRS S1 and S2, what are the 4 pieces, Jisa? It starts with governance, strategy, risk, targets and metrics, all connected, right? Now we can't say today's financial report, it is not just number crunching, everything connects to governance and strategy, because without a board, see all this page 13 debate is about the price volatility, forming treasury department, having different arguments, right? So all of these things you can actually, if examine, ask, are you happy the way the board is currently structured in terms of various board committees? Now I will ask one question, probably Yashika can argue on it, right? Now they say treasury and risk department, and at a point they say this can come under finance. So I don't agree. Why? So that's where in a case study you should build, like Professor Ravi said, I'm sure, you can't have one answer, right? It's about different perspective, and as long as your answer is acceptable, yeah, so like I said, I will try to talk less. This framework, all what I want to say, be aware students, major change in Sri Lanka during last year in corporate governance. After many years, our entire listing rules, corporate governance section was revamped, bringing the risk committee, a lot of changes to board of directors responsibility, you need to be aware. And we are going to share all of this material with you. I am just going to show you there are so many framework. Right now, there is a chapter dedicated in your syllabus on the enterprise risk management. What you see here, the CASO framework that has been there for many years in terms of CASO Cube, and on the left side you can see the latest framework being the CASO Helix and ISO 31000. In any of these, the whole idea is to strategize, right? How business strategy connects with the risk management strategy. So I want to ask you, right? Now, let us say, give me an example, one of the strategy discussed in the case study.
We have the possible acquisition of e-considerations.
Right? Now, this acquisition, are you doing a risk analysis? For example, you are going to acquire an e-commerce platform and you have legacy system. When you integrate, there is a major disruption, huge reputational risk. Are you ready to take that? Yes or no?
Depends
now
on.
You compare, there's a business strategy, actually more than a business strategy, it is a acquisition, right? Obviously it connects to strategy. The risk strategy is to say, board to decide what is the amount of disruption or a margin erosion that we are ready to accept as a result of this acquisition, whether they have enough cushion. So that is where, what is the connectivity between business strategy and risk strategy is the appetite, right? Amount of risk you are willing to take. That's a very important part from risk management perspective you can ask. Now I will ask you another question. You right, because you did the analysis. Now, if they are going for acquisition, what is the strategic framework that they can use to really analyze this risk and reduce? Is there any framework that you can recommend typically when you are going for acquisition? Now you are going to marry, you are not just going to marry, right? You will study, right? I mean, you have to look at 360 view about partners. Likewise, see, I will just show you. That's why you need to really look at, see the power of due diligence as a key control for acquisition, right? I am sure Professor Ravi may disagree that this company, you know, they can't again spend a lot of money and acquire and fail. Are there alternative strategies? But, Nayananjali, again, tax matters, right? Now in e-commerce platform, right? What are the tax issues that, do you think, is there anything to add from that perspective? Now I spoke about Forex hedging. Now look at IFRS hedging, hedge accounting, right? Really very critical topic, right? And then what are the tax implications if a company is going to use hedge accounting, right? Hedge accounting is really tough. And then it talks about intangible, of course in this company, but other company when you acquire, there can be tax implications. Anything you want to add there? From a tax perspective.
Sessions I will add.
Okay, sure. So likewise, so far what I am trying to say, I have several slides which I am going to share with you. How you look at strategy from a risk perspective, right? Each of these frameworks will tell you, you know, if you are now, I am sure Professor Ravi may talk about what are the other options are you going to do a joint. Now even there, you have specific risk in terms of strategic fit, cost sharing, your knowledge, and so on. And if the biggest risk that you need to look for, even in this case study, I mean, that is the reason now they are going for e-commerce, all of that. If you are not ready to see, for example, disruption, right? How your value chain can be disrupted through technology, right? AI, blockchain in logistics, these are largely used. If they are not investing, they will be out of the business. And that may be the reason why they are going for the acquisition. And that is where we need to look at, I am sure Professor Ravi will talk that through that new concept of adaptive value chain, how the AI, the technology and partnering you are bringing together without putting a lot of money at risk. I will stop from there, no?
Thanks so much, Mr. Indune, for that elaborative explanation. I'm pretty sure the students would have thought that is as very helpful. So building on that, I'm going to direct my next question to Ravi, sir. I think Mr. Indune will touch on it as well. Can you help our students assess the competitiveness of Hayworth, especially with e-com solutions coming into play? What are the possible frameworks or models that students can use when answering a question as such?
Okay, good. And Mr. Indranil gave a very good idea and views on how I should navigate my answer. It looked like it is a political argument, agreement and disagreement. So, but we take the positive politics.
Yeah,
Final outcome should go to our customers one day. That's our students. Yes. Now, even there are rather disagreement. I have alternative views. Now, this balance sheet, as what Jessica very correctly mentioned, their balance sheet is heavy loaded. So their wheels are
the best word to use.
Yeah, heavy loaded. And then if you calculate return on assets of this company, you can see the efficiency level of the company. So that will count for, once again, for the cash flow and the business cycle impact come for sure for this company, the way it goes. And you want to highlight the concept of adapted value chain, which is not new rather. Unfortunately for us, it feels like new. This adapted value chain, where we talked about still the generic value chain of Porter's value chain diagram. If you looked at page number 21 of your case study, and even the little story about their thought of e-com solution private limited acquisition, these are giving the kind of hints. Why not this company goes for a industry linked value chain, and I invite all the students to be good readers about 3PL to 4PL, 4PL to 5PL approach. So in the industry value chain, if I take the global supply chain business, logistic business, 3PL is one business model where the main assets are your own and then you convert into money.
What
revenue
3PL
generation.
stands, Professor?
3PL.
Yeah. When you say 3PL, you say 3PL?
Okay, I'll come to the point, right? 3PL, 4PL and 5PL. It means how you go with the concept of promised value proposition. Whether you provide 3PL, this primary logistic part, the 4PL, you give the primary logistic solutions. However, properties are not yours. You don't own your own assets to provide the solution for the companies. 5PL, from the beginning to the end, it means manufacturing to the end customer value delivery. You provide horizontal service, not the vertical service. But in between the processes, you do not have your own, but balance sheet loaded, your own properties and assets. Then what happens is, that's where the adapted value chain comes. You can see the screen over here. 3PL, primary logistics solution, you provide it. And then 4PL, you provide the solution for the customers, but using others' own assets. That's where my alternative thought, rather disagreement,
Sure.
the thought comes as strategic alliances, because this is too loaded now.
Yeah.
So looked at now, if you looked at in frame of finance and accounting frame, what you try to do, get the maximum out of what you have. When you kill in the same framework again and again, what happens? You will end up with a vicious cycle impact, because asset depreciates. Why not you keep this out and go for alternative thought of strategic alliance? This is non-equity based. So acquiring this e-commerce company, and then if you looked at the very nice explain the emerging trends in the logistic industry, it invites for this company to adapt adaptive value chain. Now you can see the diagram. So this diagram very nicely explains how to use AI, blockchain, even other computer or digital aided facilities to restructure the business model, what you're going to have it for
You
international
are
business.
referring to the second part of the diagram.
Second part, you can see the second part of this. Now, look at the starting point. It is not the typical inbound logistic, the primary part. Start the primary chain, product development and acquisition. How we do that? No need to have our own inbound logistic, our own money involved for the acquiring the resources and all.
This is any traditional
Yeah.
focus.
No, this is something goes with the new approach now.
Okay. So
So-
there it talks about, usually we just start with inbound logistics.
Inbound.
Here you talk about
Product development. How we do product development? Let's see. Now they acquired, e-commerce platform company.
Yeah.
So they acquire the customer first. This is not the traditional process pull strategy. This is demand pull strategy. Look at the demand first. Acquire the customer first. Second one, generating demand. Use acquisition. Now you have a clientele. So did you spend money? No. So you do the basic operation. You do the logistic, process supply and services. The customer acquisition, and then international market, how you promise your cost efficiency approach, getting international customers to your segment, because this case study explains we are at the strategic location between Dubai to China, Singapore, that region. And it talks about this Mattala airport, Mattala port and everything.
How do you collect those customers?
Definitely. We are like a temporary park for the facilities. So we can do, that's where the 4PL and 5PL comes to see. To convert our business model into 4PL and 5PL, we need to collaborate with industry partners. Collaboration strategy. So that's going with the strategic alliance. So students, I always emphasize, why not you read this model? We can send this model for student to read further. And when you Google, because our role is a teacher role, right? Whoever. Go to Google, search adaptive value chain with the keyword of logistic industry. You will get a lot of answers. No, this is for the generic approach, but you
I
can.
will ask you one question. Now,
Yeah.
see here, now all of this, like you said, start with the demand, you acquire data, all of that. Now what is on top is how you are using technology, right?
Definitely. These are secondary activities.
this piece is totally supporting the technology.
Yeah, and what you mentioned, Indranil, about this board of directors
Yeah.
focus should be complete outward approach.
Yeah.
In outward approach, strategy development part, you need to focus on new digitally aided approach. For an example, now why this company is compelled to go for acquisition, or my point is rather going for acquisition, best thing go for strategic alliance, maybe one Dubai company, one Singapore company. So they will give us opportunity to serve for their logistics clients. So it's not you fight with Dubai, Singapore company, the local company, go for strategic partnerships.
Yeah, some partnership. So probably that can be a question for students, right? In addition to acquisition, how do you strategize?
Alternatives. Alternatives.
Alternatives.
Now, for an example, what Mr. Indranil mentioned, like let's see, marketing team. We don't want to have in-house marketing team for that. You actually, even once you acquire this e-commerce company, you become a marketing team for your competitive organization as well. So don't believe my word. Ask the student to search global case studies. Even one global marketing team serve for competitive organizations. So you have to think out of the box. Otherwise, the stock pressure, asset pressure will create crazy journey for the company. So my invitation for students, be very thorough enough this point number 11, and then read the balance sheet, the asset load. Can they still go with these assets? Are you going to make additional load to the assets? Or else go for alternative thought. So everyone, better you read this adapted valuation approach, because it has given enough hints in this case study. If you read the last two paragraphs of page number 21, this describes the same diagram. So strategic thinking should be there for adapted value chain. That's going to be the real solution for this company to face for the challenge. And of course, especially it provides some hints in the case study. We are at the Sri Lanka at the right middle of Singapore and Dubai, and the giant economies like China and India. So we are in the Silk Road. In a Silk Road, no need to think of the traditional framework, right? We call it as soft strategy, not the hardcore strategy. The soft strategy should be the best option. Adaptive value chain could drive for that for sure. So then I didn't argue always. I provided like alternative thinking.
Yeah.
Absolutely, Ravi. So I think that was clear enough. You painted a clear picture for our students with what is hinted in the case study and giving them that picturesque understanding with the framework itself. Thank you. So expanding on the same theme with the merger and the acquisition of the e-com solutions, I would like to direct my next question to Ms. Nayana Anjali. Can you elaborate a bit on what sort of tax implications should the students be ready to answer, especially in the scenario of such an acquisition?
Yeah, here's the thing is, if there is acquisition, then a student should first evaluate the transaction. Then for the each and every angle, a student should know what has happened. Then they should have the clarity what the company has done or they are going to do. Then on that perspective, then first they need to look at if there is a company is going to acquire another company, then what's the way of financing? Then that's one of the major decision which amalgamating with the other core subjects, then that is visible. The options it has given. Based on that particular options, then students need to evaluate or analyze or discuss what are the tax implications on this each way of financing. It may be the equity financing, it may be take the free cash, it may be the debt financing. Then when it comes to these options, especially when it comes to the debt financing, then particularly it's a debt financing normal which is a discussion is tax deductible, but not it's the as always. Then the students need to clearly look at if there is a debt financing, what is the position, current position of the balance sheet of the company. then in that situation, based on it's limited to always the stated capital plus reserves, but not the revaluation reserves. Upon that particular concept as given in the regulations, the Internal Revenue Act, then in that they have to go for the 4 times of that. Then basically based on that, what's the current borrowing position and what's the adding new, all this picture they have to evaluate whether this tax component can be deductible or not. If it is deductible, then again we have to look at what's the purpose, nature of the loan or the borrowing they are going to take. Then it's for a particular acquisition. Then under that particular situation, the students need to evaluate whether it's a deductible, whether it's a non-deductible. If it is deductible only, the tax benefit they can take. The tax benefit is a 30%, which is the corporate tax. Then like that, they have to evaluate on first thing on the finance decision. That is the first thing. Then after that only the particular acquisition can be happen. Then afterwards they need to look at okay, for this company, what is the tax implication? Then in that, not only the direct tax, not only the indirect tax, all other taxes. We have stamp duty, then we have SSCL. For all these taxes, the students need to look at. It's a one package. We have to give, it's not limited to the direct, it's not limited to the indirect. For the particular that transaction, then we need to provide, okay, what's the income tax implication? When it comes to income tax, it's not end with the corporate tax. It may be capital gain tax, it may be withholding taxes, this deductibility of the expenses and that particular angle. And when it comes to VAT, on the transferring of the assets, there may be, it's based on the method they are going to acquire. It's asset-based entire, the valuation they are going to do and take this, or the share-based, then like that. Then basically on that transaction-wise, the VAT implication on the open market value. And again, not only that, the SSCA, there is another tax, which is the Social Security Contribution Levy. Then what's the implication of that? And the stamp duty. Then all these things, the students should have a wide knowledge, not only give the, as Ravi sir mentioned, they have to not give the answer. It should be a particular solution. Then to give that solution, the student should have this wide knowledge of the taxation. And again, it's only taxation one part. It should be always compatible with the correct decision. Then that's why I again need to link my first part, which is the students should identify what is the correct decision. Then under that correct decision, they have to apply the tax application. Again, not only that chargeability and all these things, then why students need to, why don't they look at on the concessions, exemptions, and if this new company, if they are going for a foreign operations, then what are the exemptions available? And after now with the changes there are for the foreign source, it was applied the taxes, even it's a reduced, now it's a 15% for foreign service. This is a logistic industry. Then therefore all these angles, it's not which is in line with the not in a 1 year of assessment. They need to look at for the future. They are going to give a solution for a decision. Then therefore they need to analyze today, as well as if they have the available information on the law which correctly enacted, they need to give that information also. Then under that kind of the wide answer, I'm always telling their decision, it should be colored with the tax. Then it's so, if it is so, then it will be a nice answer from the side of the students with the match with the examiner's requirement, as Ravi sir mentioned, is an integrated answer with all the particular parts.
Thank you, Ms. Nayananjali. Just to summarize, students should not just look at from one lens, but should integrate a lot of areas into the answer, whether it's like direct, indirect, the source of finance, the type of acquisition, and all of these aspects when weaving a question in terms of tax implications for an acquisition. Yeah. Thanks a lot, Ms. So moving on to the next section, In
I
terms.
have a question. Are you the acquisition perspective in page number, which is discussed in page number 18? There are 2 dedicated pages, right? And it talks about the asset base that is going to be acquired, right? Specifically, this company, I think Professor Ravi mentioned, and both Yashika is heavily loaded, right? And then because what I want to emphasize the financial reporting perspective, which is very, very important. Now, if you look at the acquisition, right? Now, what is the main risk from a financial reporting perspective? Now, they specifically draw this is an e-commerce company, and then you might have to pay a much higher price than the assets for the customer contracts, which is an intangible asset. So the valuation of those contracts involve really judgment. So areas like IAS 38, intangible asset valuation, the goodwill recognition, the impairment, those are going to be major issues when it comes to the valuation. I think that's important. And again, Yashika, you want to add anything in terms of the acquisition from a finance management perspective?
I think Antonio, it's very probable because it has been highlighted just as you rightly said. Now, operationally, they are, I think, they have efficiency issues, right? And also, a long-term concern is that they are dipping revenues over the years. And also, when you look at the balance sheet, it's also a concern that their cash reserves are also depleting, right? And also, when you look at their reserves, has been also depleting due to probably various inorganic growth that they have been into, and also I think they went into a free trade zone operations as well. So probably they would have done an equity-based investment in there. So now now the company is in a stage where you have to do a very conscious investment decision. It should not only be on the growth perspective, but also from a stable perspective, right? You want to acquire and probably you want to sort of get into the wider region, but just as I think Ravi sir mentioned, it should not be more as a burden on the balance sheet.
Yeah, that's why if I interrupt you there, if you look at page number 19, right, para 2, it talks about how are you going to fund this acquisition in the context of currency depreciation in the country, IMF regulations. So the last page, para 2, page number 19, specifically say, right, the company, we have to look at the financial flexibility, potentially making it more difficult to fund the acquisition, right, to integrate operation without resorting to debt. Right? If these risks are not managed, it can erode the whole strategic benefit, right? How do you comment on the funding part from a finance management angle? Because this paper is also biased towards the application of financial money. Can you quickly, you can later, I don't know if you added that, give a view on that.
Now, before getting in there, we should look at the numbers. Now, if you look at the net asset value of the company is about 75 billion, and we are looking at acquisition almost about 23 to 25,
That's
which is about
size
1/3, right?
Yeah.
So that's 1/3.
How is
Now,
their debt structure on the debt?
And also their debt is exceeding
Yeah.
28 billion, if I'm
Yeah,
not mistaken,
yeah,
right? So that's why I said it's always a heavy load. Now, for me as a treasurer,
Are you willing to give money?
my due diligence will not go through.
Yeah. So remember students, I spoke about due diligence. They are the finance due diligence. And Anjali explained the tax due diligence. And remember, application of intangibles is very, very important because most of those balance sheets you will see. And then an additional point I want to highlight when you go through this asset, specifically say that the 15 billion, I'm referring to page number 18, para 2, the potential acquisition out of that 15 billion, right, 30 delivery trucks, that is 650 million. And then it says technology infrastructure, which is your IT asset that has proprietary fulfillment software and real order tracking valued at 6.5 billion. Now, when it comes to this proprietary system, which would have been internally developed, customized, Whether that will work or not with the system is another part which I will contribute in the risk discussion. But again, the fair valuation of acquisition is going to be a major thing, because especially because this is an e-commerce platform, and like I said earlier, they have specifically mentioned there are long-term contracts with major retail brands. How are you valuing that, right? And then going to amortize. So students, that's very, very important from financial reporting perspective. I think sorry to take that extra time, but that gives a full perspective
I
of
think
that
that added a lot of value to the students as well. On the topic of acquisition, I just want to direct one question to Ravi, sir. In terms of the company structure, now, if the acquisition was to go through, how would this reflect in the company's current company structure, and what are the possible implications it might have post the acquisition?
Well, now if we looked at all the dialogues what we talk, and we are not giving answer for students, but we are not complicating their minds as well. It's kind of a beautiful complication because students, they need to connect what we talked and what I directed for their self-preparation. Now I will come to your question in this way. Now this company follows two strategic views. The first thing is the competitive strategy. How they stood actually against the competitive companies in local operation as cost efficient approach. So they promised we provide cost efficient service, where finally they had a lot of challenges because industry like logistics, it shouldn't go with purely cost approach, because a lot of cost elements are very vulnerable. We are in the VUCA world now. The vulnerability is a permanent asset of this industry. So if you promise to client, we are going with the promise of low price, which is not in the alphabet of strategy for this industry. Later they talk about service quality failures, and the customers were charging to the company. They even I think also we raised that issue during our little commercial break. We had that commercial break as well. We are human beings finally. And then, right, this reputation management strategy. So it provides a hint to this company in future with this all internet things and the AI powered mechanisms come in, and the digital transformation, customers expecting the globally well-touched customer service quality. This company, the first thing, they have to make a strategic drift towards differentiation point. When you go for differentiation, obviously you have a challenge, internal challenge now. That's why we can further talk in future. What is the internal capability assessment organization right now has?
Because there are many challenges given in the case study. They are failing internally.
Obviously. And even the other side of the survival and the growth depends on how far you do the differentiation.
Yeah.
Now, one strategic drift is go for differentiation. So
when you say strategic drift, you mean a complete shift from cost to, I mean, as a term for students, huh?
Especially complete drift in terms of the customer value proposition. Because if you looked at all these revenue challenges, finally, we do all the homeworks, let's see, it's done perfectly, but if you don't know how to acquire the customer competitively, your revenue generation doesn't happen. Now this enough stories, evidences provide, global customers are moving towards low cost expectation into service quality and differentiation expectation.
Yeah, I want to interrupt now. Lisa, you would have seen when you analyze the case study, it talks about how Sri Lankan competition address this. For example, they talk advantage. So obviously,
Yes.
we will have expert session. Now they increase the price and how Expo manage it, right? So that talks about pricing, probably increase price, route optimization. Now those type of little things help, so they want for a total shift.
Obviously. Now if we want to go with the stock pressure and the asset pressure, we need to generate money. Very simple formula. You go with a very simple language. Without increasing revenue, you have the asset value is there, loading further and further. Finally, if you calculate, as I told you earlier, asset into the profit or revenue generation, the efficiency problem we have. Only thing is, get more money involved, cash inflow. Why not we go for little high price? For that, you have to make a promise of differentiation. So one thing, competitive advantage you have to relook at.
Yeah. if you just increase price, even here they say how they lost some of the one
Yes.
company, they are losing. Competitiveness is gone, right? The
Gone.
price competitiveness.
So price competition, you can go for little price increase,
Yeah.
but provided you provide all these facilities, service quality improvement with the technology and all this stuff. Second one, the growth strategy model they applied. Even I was telling the previous dialogue, they were stuck in primary logistic, what you call third party logistic, primary logistic company,
3PL.
3PL. You asked
I
the same
asked you
question.
what is
Yeah.
3PL, you didn't answer.
Okay. You are a very good customer for the 3PL again, right? And then what I was telling is go for the 4PL and the 5PL.
So what is 3PL?
Third party logistic. It means primary logistic part.
Right.
So this company.
That means you manage your own your assets.
Yeah,
right?
we manage with our own asset.
Heavy
so
balance
I provide.
sheet.
Let's say Indian has a business.
Yeah.
I'm a 3PL company. I have my own properties, lands, vehicles, all this stuff. And then I provide third party logistics service, transport service to Indian's company.
Yeah.
So I'm a 3PL company.
Right.
Third part logistic, what we call primary logistic service.
Right. I think that's important for students. Those
Yeah,
are like
yeah.
business models, right?
Models.
3PL
At
models.
least 3PL, 4PL and 5PL, not the IPL, no, talk to the right? Okay, so all these three levels, people should investigate and study.
Yeah.
That's what I would say is,
So 3PL becomes 4PL when you.
when looked at 3PL, where you want to go the 4PL, it means your expansion happens, service expansion happens for the customer, rather just become a third party logistic partner. I do give that maybe I'm going further, supplier connectivity, and then finding some effective supplier for the raw material. I'm giving more services, but I do not acquire my own resources.
That means you are going in the value stream further to
Expansion of
expand
value.
and to support that
Support
particular
services.
service. You can go to supply, we call it say tier 1 to tier 2, 3
Exactly.
across the value chain,
Yes,
right?
it means horizontally my service expansion I'm going to do. But here the good thing is, especially this company, no need to go for your own assets for that.
Yeah.
I get another 10, 15 big trucks from some other company for maybe 5-year agreement, 3-year agreement. So I'm running the service, giving the 4PL service. It means more than just transport service, some more thing. But I'm running with others' own assets. In my balance sheet, I don't get asset load always, what Jessica was mentioning. So that's a smart approach. 5PL, it means from the raw material to the last customer delivery, entire range I will supply to you. So I am not going to have my own assets for that. That's where these e-commerce platforms, what I mentioned, adapted value chain strategies will support me to run a profitable business based on others' own assets.
So are you commenting, Professor, this company right now into traditional 3PL model, and
Yes.
now the environment pushes them to shift from 3PL to
4PL
and
and the 5PL.
not to IPL.
Not to IPL. So, probably they can sponsor for IPL one day if they properly do that. And last thing, now I talk about two areas, competitive strategy, how you should look at, and then market growth strategy, they have to go for unrelated diversification as well. Now they are too much drinking the same troubled water. They should go diversify. Look at other competitive companies mentioned in the case study. They have very nicely diversified, risk diversified. They have different clientage, different industries as well. So if you looked at these companies, all the operations up to now, they were doing the improvements, but vertically, but not horizontally, different industries. At least, for example, logistic education business per se,
That's a good suggestion.
where you get intern from your own company, provide some NVQ qualifications. Just, I thought it. Why not packaging company? So if you start packaging company, at least a strategic partnership with another company, you become the logistic partner for a packaging company. So it creates a lot of business opportunity. This is what you call unrelated diversification. So this, I have another issue. Why not this come to go to that level? So student get ready, if a potential question come for the strategic alternatives, you can go in.
Yeah.
So that's
Can you
how-
apply something like ANSOF model in a type
in
of framework?
ANSOF, correct, very correct. In ANSOF model, I think you are the best one to read the student mind now. You ask the right question always. That's good, right?
I
You are
like
real
to be a
marketer.
student, I am learning from you.
But you don't pay me. So now the typical ANSOF model you can apply because they have gone for penetration.
I think Jisa, if you
They have added new products. They have gone little to new product, new market strategy, but diversification they have done, but to related approach, not unrelated diversification. So with all these things, final thing, I think hope my other three panelists would permit me to take some more time,
Yeah.
right?
Sorry.
But I will ready.
Sorry, Professor, to
Yes.
bother you.
Yeah.
Now, some of the slides which we are going to share with students, see, when you look at strategy, every strategy has a risk. Now, this is exactly what Professor is now commenting. Diversification strategy, right? So, market development, when you get into new market, totally new, how do you look at the risk side of this volatility of those new markets, the reputational risk, if you are going to touch area like that. So, likewise, every strategy, there is a risk of that strategy being not successful, right? Or there can be opportunity. So this is also important to look at how each strategy could fail, right?
Yeah. That's good that you connected the model. And the final part, what I want to highlight, Indranil, now, even I looked at again and again to reconfirm my thought, not because of I'm coming from marketing and strategy. However, this company's marketing, custom relationship approach, I don't know whether its purpose it did not highlight, maybe for a potential question for student. If you look at all the directors, you got find director of business development, I have seen the case study, but too much process driven company. You mentioned about the board of directors focus. So
Yeah.
they were heavily focusing over the operation side. And then maybe finance and accounting side. But this company is facing losing customer, credibility issues. And then the customers are more towards expecting the service differentiation because the global trends are mentioning in the case study, even the future logistic industry, upcoming events, insights are highlighted in the case study. This company has to go for the customer driven company as well. If you really apply this, all this stuff what we call about digitalization, whatnot. So structure wise, I have seen, as per my gut feel, this company would have thought more on market and customer driven approach as well, which is not found in the available set of information. Probably you must think about customer acquisition management, and then especially when you go for the international markets.
Yeah, what
you
you're
have
saying
to
is they
go-
have to totally revisit the structure with the
Yeah,
structure is
yeah.
supporting the new strategy.
Yes, correct. Otherwise, we can come out with strategy, but
Yeah.
who runs it?
Yeah.
That might
So
be the
Peter
case.
Drucker says,
Two things
Yeah.
in a company. Drucker said there are two functions of any successful organization. One is marketing, second one innovation. Don't get upset on accountants. Accountants' role is in the marketing innovation as well.
that's why accountants learn strategy now.
Always. Right, I think I have enough confused my students.
That's about case studies.
Yeah, case study, beautiful.
Right.
Moving on to some of the operational issues that we see that Hayworth has faced throughout the past few years, there are a few that are outstanding. First is the failures with the warehouse discrepancies, where back in 2021, an audit revealed some of the discrepancies that have been occurring within the warehouse. And apart from that, there have also been failures in terms of vessel detainment, which has also costed them with a lot of reputational damage. Moreover, there has also been certain penalties with the government, delays in the government projects, especially the dam. And beyond these, there have also been certain failures in terms of the revenue drop, and the recovery post-COVID has been lesser than expected. and also the foreign currency exchange risk with the exposure to volatile diesel prices as well as the local currency. So with this, I would like to pose my next question to Mr. Indanil. In terms of the exam, if the student is faced with these internal and external challenges, how can they really build an answer in terms of these challenges and a question?
Okay, let me ask you a question. That's what I always do as a lecturer. Now, you spoke about external challenges, right? Fuel price increase, what else?
The COVID impacting the
There's
revenue.
COVID gone now, there's a new variant coming, that's a risk. We have to be aware, it's rising, seriously. Right, then what else externally?
So that was the exam.
Yeah, so internal there are many cases of mismanagement in terms of the major project they fail government and probably they may be blacklisted to go for similar thing. And then if you look at larger part of business is all warehouse management. Right? Now all of these risks together, and then what else you spoke about the
Vessel detainment with the regulator.
why the vessel was detained, because they have released if you go to that, what is the reason given for the vessel?
Alleged violations of
Environmental waste disposal. Now these are like bread and butter of a business. Now, Professor mentioned this word VUCA. I don't know whether you listen properly, right? VUCA. We are living in a VUCA world. Volatility, uncertainty, complexity, and not agility, ambiguity. You are not sure. Right.
Very
Now,
ambiguous situation.
ambiguous,
You can't
right.
predict what would happen.
now we are waiting to see what's the Trump's decision in few days in entire Sri Lanka export sector and so on. Now the question is what I am asking you, in a VUCA world is all what is happening internal or external is one word. If you narrate to one word about future, we have what? Uncertain. I am answering to make you so uncertainty can be positive or negative. Now the question to you, what is the best framework to make decisions, right, on the face of uncertainty? And that is where risk management comes in. Even in our personal life, are you very sure about what will happen in another 1 year's time in your job, right? Maybe if you are very risk averse, you will be there. But so how you prepare for future, that's, I need the screen now. That's where the ERM comes, enterprise risk management, right? Companies are aggressively, actively looking for risk management. Now even Yashika will talk about treasury and risk function, why the board is debating, right? So this is a very, very powerful framework to make decisions, right? On the face of uncertainty, you can see on the top 4 things, right? Risk management is all about achieving these objectives, strategy guru. Right? So look at the strategic objective. Now, as far as this case study is concerned, strategically, right, is the acquisition the right decision? Or are you going from 3PL to 4PL? Right? Are you going to adopt adaptive value chain? Now, those strategic decisions, in case they are going for an acquisition, right, through a proper due diligence, how are you going to mitigate risk? So, the internal, now see, this is strategic risk. That's more to do with the external environment and then operational risk. Students, in 5 minutes, I am going to give you the essence of risk management framework. It's a whole chapter which you can go and study. Operational risk, if you now Google, risk due to people, process, system failure. Inadequate or fail, people, process, system. Now, all of these issues in the case study, they speak. Now, see, when we use outsource warehouse, one of the things that we really worry about, for example, now if suddenly we find some of our inventories are not there, who takes the liability? You imagine after that the reputational impact, you will lose clients. It's extreme. Now this bread and butter they are not managing. Operational risk, there's a huge operational risk. Now ask, like Professor said, where are the internal auditors in this company? What they are doing? Where are the risk management? Now that seems to be, they are really not managing even that traditional value chain. Hugely exposed to operational risk. Account invoice we spoke about with the acquisition, right, in the current balance sheet. We can do another session on financial reporting from risk of misstatement. Let's not go there. And compliance risk. Now, if you don't manage your compliance, you actually, now these are the 4 things that matters when it comes to risk. And there are 8 components that you need to really structure to make that decision. The first is the board of directors in this company. Do they have that risk expertise, something like a risk committee? Do they actively discuss these issues at the boardroom? Case study is silent, right? And then how do you identify various events? For example, before this, now, do you think in a larger company like that, nobody is aware that they are releasing the vessel, releasing the disposal of waste? There is no proper process. No, it's very difficult to imagine. What do you think?
Yeah,
Probably that's a
basic. These are very basic.
basic things.
And being the third player in the industry, you
Exactly.
can't do this all.
Then obviously you will lose your market share. So there is serious issue about the risk identification process. Are they looking, please students make a note of this, risk management is all about not a functional thing. Risk connects with strategy. What are the risk indicators? Now what is in the accounts are historical. What are the indicators that suggest that this is going to happen? That we call in risk management KRI, right? From KPI to KRI, risk indicators. So likewise, we can identify, maybe in another lecture I will cover how to use various risk framework, how to quantify it, but don't forget the concept of risk appetite. Now, I'll sit and talk the balance part, right? So, now relating to the case study, the issues that are covered in the case study, specifically those internal operational risks, they need to really decide from a board level risk appetite. For example, when you say risk appetite for operational failure is low, you will invest a lot of money to have the right system, right people, and make sure that you don't fail. That's where the risk appetite connects. Appetite should be low for failure. Appetite should be higher for those risks that really pay you off. But do you think these vessel, project delays, internal failure, those risks they should take or should not take? Should not take. There is no purpose of taking those risks. So,
Just interrupt you now. I thought I'm a student.
I thought like that when
now the Newton's theorem. So this all 2025, 24.
Every action has a reaction.
Definitely. Now this appendix number 2.
Yeah.
And where you guide your students to look at the provisions or prerequisites they have taken already to address the area you mentioned, risk management part.
Yeah.
Where the figures give some red light for not
certainly.
being properly managed.
Exactly. Now look at their P&L, how the profit is dropping, and so if you look at by segment, Yashika, what do you think when you are doing the financial analysis, right? See which business the segments has suffered. How do you comment? In terms
General, I think it's very evident. Now, if you, look at page number 9. Page number 9 in your case study. Now, the main part of your business is your freight and supply chain management, right? And that constitute about 50%. And how much is the revenue drop is about 35%. And what reasons do they give? It's because of global trade slowdown and freight rate normalization across, and also the increase in fuel prices, right? The other larger segment is warehousing and distribution, which is about 25%. And now the occupancy rates have fell by 12% because mainly and leading to the lesser profitability. What the reasons that they have given is higher inflation and lesser consumer demand. I assume now that has to be linked with the COVID period as well, where people didn't want to get into warehousing. Also, the other segments, when you look at project logistics, heavy cargo, revenue is about 18% drop, and aviation is about 10%. I'm sure it's also not doing, case study is silent, but growth was noted in regional trade corridors, but not in the key areas that they were expecting. So see now, when you look at the portfolio of business, they are losing major income from the mainstream. And I always call this company a more of a reactive company, being the third player. And they have two, exactly. And they have two companies already in existence, two larger players. And also they would probably have global players to take a look at.
Students, now from what thanks Yashika for this. Now as an exam question, say if you have been asked to do a risk analysis and identify top 5 risk and present to the board in a risk heat map, right, based on the impact of the risk and likelihood of the risk, and I will show all of that. Maybe we can do another session on the risk, how you communicate for those risks which have a higher likelihood with the extraordinary impact, can even kill the business, right? But now there are a lot of likely risks, right? Those things have happened unless they have mitigated those warehouse problem, releasing waste, all of those basic problem. If they haven't corrected, these risks will continue. How do we know whether they have corrected? Then I want to draw your attention from a risk perspective to page number 14, where in a debate, finance director specifically mentioned that forest management, remember now Yashika is expert in corporate finance management. Now corporate finance management is a branch of enterprise risk management, right? Specifically they talk about forex management. I am sure there will be tax implication of forex management which Nayananjali will add. Yes?
Yeah.
Because you didn't answer my previous question.
Now I can answer your questions.
Excellent. Right.
Everything has a right time.
Okay. So we'll give her the time. So page 14, monitoring forex movements and advising on forward contracts to major expenses. Again, student, from a treasury perspective you should know it, and from accounting perspective, financial instrument standard, how to apply hedge accounting, things like that which I spoke earlier. Then one big topic is fuel procurement contract. How do they negotiate? It's an area susceptible for fraud, big deals, right? So how do you structure your procurement strategy, right? The risk associated with it, and whether there are proper segregation of duties. Is there a procurement committee in this company before they hand over? Now you know nowadays how many cases, how many former ministers are going to the bribery commission, right? Now that is the context, these areas, especially procurement contracts. Now it's specifically mentioned negotiating bulk contracts with supply. So what are the controls that they have when it comes to those? So I think with that we can hand over. Now to summarize my question to you, by looking at this, I am giving you a question, right? You do a risk analysis and present to the board top 10 risks. I mentioned 4 types of risk. Professor, you remember?
Yeah.
Strategic risk, right? Operational
risk,
financial
financial
reporting
risk.
and compliance. And do in a heat map, right? Jisa, can you quickly draw a risk heat map and show how it can be done in 2 minutes?
No, you can't.
Because you are. So this is how students you can actually showcase when you write a report to the board. You can go to a new slide and do a risk heat map. Now, so basically 2 things.
That small circle.
Any color you like?
Red.
Okay, risk.
Yes.
Now these are all practical things, right? Because I know she is also a risk practitioner, she can easily do this. So how do you give a simple view of risk to the board, right? Based on these 2 criteria, right? Now I want you to think while she draw this, what you can draw. What is the, I will ask Yashika now, what is the biggest risk that you see in this case study, right? The risk, what's going to happen. This is going to happen, and you will have a reputational damage, your financial, your processes, so legal case.
Now
Future, risk future.
Yeah, when you go through this,
I am not teaching you risk management, I know you know, but I want to get to a point that.
Now, when you go through this, it's very evident they already have lost the credibility.
Okay, so
Right.
reputational.
Reputationally, and also.
But that is the
as a-
outcome, right? What drives that risk?
So,
What drives the reputational risk? Professor, you are a student now.
Yeah. Obviously.
Why there is a reputational risk? Reputational risk is the outcome. Or what do you think? Madam, you are a tax expert, but what do you think?
No, it
No,
is
why
due,
this?
due to this internal operation mismatch.
Excellent. Failure to
Operation.
manage internal operational risk may result in loss of clients, revenue drop, right? Credibility, all of that. Now that one, if they haven't taken any action, Jisa, where do you park? Now I know you have to use the green color now. Can you mark your risk appetite quickly? Now that's another big, remember student, risk appetite is a strategic balancing act. While you are a strategy guru, you have to learn risk management.
And you would be strategy guru now. I'm the strategy guru risk now. How to maintain it? I think so. That's it.
Right. So students, out of joke, when you read this diagram, right? Okay, Jason, now see you are talking probability, right? So let us say probability, can you erase negligible? Shall we word like this? Probability, let us say remote, right? So 1 is a remote possibility, right? 2 is a, right, 1 is remote, 2 is, let us say possible, 3 is probable, about 50% chance, right? 4 is highly probable, right? Now those operational failure, we have to analyze, but probably probable, right?
Yes.
Maybe you can give a scoring of 3. And then if that happens, the damage from a reputational perspective, right? I think you have made a mistake. So this is the probability. Shall we make it the impact? Yeah. The other axis, the impact. So in a risk, that's good. When you do a mistake, they can learn very well, right? So 2 axis, because these are very important if you do a risk heat map to the board, right? So that is no. This should be the likelihood. You have said possible, probable, highly probable. No.
This side also. Okay.
Yeah, that side only you have to change, right? Impact we can say impact is minor, right? Minor, moderate, major, extra, catastrophic.
Yes.
Catastrophic means you are in a major, problem. So whether the risk has a minor impact, don't worry, right? And then moderate, that's your impact.
Even we have one norm called zone of tolerance in the risk.
Exactly the point. I am happy that you are getting to the point that we call in risk management risk appetite. Now
Yes.
those operational risks, if they see minor,
Yeah.
no impact, that will come to the green zone, right? So for example, you can mark this area in green, right? Green means those risks you have taken when you run
Yes,
this,
yes.
right? But if any risk appear in 16 category, can you tell me what is 16 here? If you simply give, this is a 4x4 matrix, 4 into 4, 16, you give a risk rating of 16, being a risk that is highly probable, and then if that happens, impact is more. Now, although this is very simple, most of the boards are looking this, risk is both art and science. So now you will have a lot of data to back this and say, look here, you are in a danger, and how you are going to bring this 16 risk down, right, to your risk appetite. So your risk appetite is this zone. If this happens, this you can mark in green color, right? If this happens, no problem, right? So this area is the board risk appetite. So that's why I say whenever you go for a strategic decision, operational risk, you need to make sure the risk that you are taking is within the risk appetite. I think that is the question I want students to focus. With that, I will now direct to Yashika, specifically from a corporate finance risk management. That's a specific topic in finance management. Right now they speak about the fuel. In Sri Lanka we had good example of hedging, right? Hedging fuel, can we control it? Forex management, there are various techniques. I am sure when you go through the study text, even in FM, that's a hot topic. So how do you connect it? Sorry, I have taken your role now. You're planning to ask that question.
Now you put her straight now. Just going to lose the
So you come here. Anyway, that make your life easy. You can talk.
So, again I'm reiterating that this company has become more of a reactive company than being proactive. And especially in the industry relevance to logistics, supply chain, warehousing, I think we could have expected a little more responsibility and proactiveness, right? So which leads, and when you're going through certain comments from the board of director finance, I don't see that weight coming. It only says, if you refer to page 14, foreign exchange management, monitoring forex movements and advising on forward contracts. Now, see, your operational expenses is a fatty layer of 30 to 40%. And surely you need to have more sense, process, planning into that area which constitute about larger portion of your OPEXs, right? Now, when you look at certain companies who are already in the business, which are large operations, we don't have to go globally, right? Let's look at certain companies which has been mentioned here. Now, how they are managing the foreign exchange is surely through different option mechanisms like forward contracts, options, and also they would also sometimes have swaps, interest risk management.
So are you going to do a separate session explaining how to apply?
Yes, yes. So we will have a deep dive analysis into the pre-scene and also into a more probable questions into foreign risk management and all that. So we will touch base the mechanisms.
Our students really like, they may be very unnecessary calculation here. So, but remember,
I have a feeling that we will get one or two,
Yeah.
foreign risk management mechanisms, at least 2-3 mark questions, because it's very apparent in this, right?
So
And
please
it's
do
very
some
hands-on
questions.
even for those.
Yeah.
So we'll get a good in these night for sure.
So the other thing is now a commodity like fuel, which has always been fluctuating in the market and has almost been a decisive factor for certain regions, for countries to run. It's imperative that you should have had a mechanism, right? Now what you can basically have, where Sri Lanka has almost gone wrong, is getting into the wrong terms of forward contracts, right? So now all these things cannot be just done with a general finance team, because finance itself has different tasks and I think KPIs, right? So a large company like this should ideally have a treasury department, especially overlooking those functions. And when you look at, I'm little skewed towards analyzing the balance sheet. When you look at the balance sheet, it's, I would say, needs a restructure.
Why do you say so?
Now, in the middle, if you go to the
Balance sheet page
annexure.
24, yeah.
Yeah. See their total assets, right? Now, starting from 67 billion to 74 billion, right? Look at their liabilities, 21 billion to 28 billion. Out of which, how much is their current liability is about 8 to 11, right? Now, also their non-current liabilities 12 to 16.
You are referring to 2021 to 25.
Yeah, in a span of 5
Yeah.
years. But we have to see what they have exactly done. Now, I'm sure within these 5 years, your entire PP would have been depreciated, right? So your technical free cash flows would have been, the available free cash flows must be less, right? And also on top of that, they are talking about acquisition, which is almost 1/3 of their entire balance sheet, right? So with such a liability level, I don't think getting into a number one acquisition is possible. Number two, we have to see how the previous the financial currency has been managed, and then also the fuel commodity has been managed, right? So it clearly shows the inefficiencies in the inefficiencies that they have in their financial pillar. So it needs a real restructure. And also on top of that, that's why I said, now when you look at the liquidity, disposability of the cash is another problem. So liquidity is another problem. And see, we obviously talk about Sri Lanka, which is in the IMF program. Now, getting access to fund about 5 years back would not be a case, would not be a real issue. But today it's a real problem, at least now to a certain extent, since we have come out of the bankruptcy region, ratings have now started to come up, so that will no longer be a problem. But still our hands are tied to a certain extent. So when we want certain liquidity, our funding will be at a more higher price because our risk premiums are high. So funding, liquidity, and when you go into even working capital, I see a lot of over trading here, right? So that's why I said this entire balance sheet requires a lot of restructure.
I think you better explain through your deep dive in this area with
Yeah.
the analysis ratio and all that.
Yeah,
They
so
will
when we are
explain.
doing the
Details.
yes, we will do that. And also now overall, let's forget about how they have operationally, because it's a fairly capex intensive industry, large industry. One or two things can go wrong, which have an impact on their brand name. But overall, even when you look at their financial numbers, I see it's a value killing than value addition. So all these aspects taken into consideration. Again, I think your next question would probably be what is, and since they're talking, I think in one of the pages, they're also talking about setting up the Treasury Department, which is very evident.
Yeah.
It has to come in. Only thing is now, when the Treasury Department comes in, it can't be, or it shouldn't act in a back office finance position. It has to be a more active deal making, contract reviewing, and actively involved Treasury.
So I think those are famous words in Treasury: back office, front office, and what is the other office?
We have front office, middle office, and back office.
Can you explain now, Joe? Because these terms are important.
Yeah, so actually it comes.
Professor, are you aware about those three offices?
I know the box office.
Yeah, let's. Can you briefly?
Yeah, please.
Sure. Now,
That is typically in a bank you have those three offices.
Exactly.
But how do you structure
Exactly.
that to a normal organization?
I think now, basically the functionality comes from the bank, as you rightly said. So back office is where a lot of documentation, processing, KYCs, KYC basically stands for know your customer,
Know your customer.
all that happens. Front office is your bank, your customer facing
Customer-facing.
entity, and middle office is bank's treasury department. So
Yeah.
that's not only for bank itself, that's also for other banks, and also for corporate banking, retail banking, all that emphasis.
Is that right to say that's the check and balance in middle office?
Exactly. So the segregation has happened. Even back office makes a mistake. Front office and middle office is there to not to safeguard, but there's checks and balances happening in between.
Yeah.
So even if back office has done any mistake, it will get captured in
So
one
my
or two.
question is, if all three officers right, which office will detect it?
Then the back office will
So that is where the
Um,
risk management and internal audit should connect. Now, this case study is silent about the governance structure, right?
Yes.
Now, finance wants to keep this department under finance department.
Yes,
There's
that's another
argument.
thing.
But then their independence goes for a six.
And
Right.
interrupt now,
Yeah.
thinking of student side, wouldn't be a potential question for those.
Exactly.
Propose.
That's the clearly area now. As an advisor from a governance perspective, what is the best structure, and shouldn't you connect this to a independent board committee like a risk committee? Students, I mentioned recently listing rule change. Now even in our corporate governance code, they are demanding to have a risk committee or audit committee to take responsibility of risk management, so that there is a set of independent
Overseeing
directors where if treasurer feel that this is not right, finance is pushing you, so you can actually, they will independently support. That's where that board oversight matters.
Even for any industry or
No, special. Yeah,
Anything
it's
that has
common.
been
This is
listed.
because listed
Listed
anyway.
company.
Risk
Okay.
committee, audit committee is
Obviously.
mandatory. But
Yeah.
now this has come to. It's there in our law. That's where students, you have to get your knowledge updated. It's now recommended, right? In
Okay.
by listing rule, even for other listed companies, they recommend if you don't have a risk committee, audit committee should take that additional hat on risk management. Yeah.
Okay. I think it's a superb insight for students.
Yeah, definitely they have to go
They should
through, I
be alert
suppose.
to that. Yes.
Excellent. I think with that you answered my next question.
Okay, good.
Yeah, I was keeping Miss Nana actually. So
She is waiting to answer.
on topic, in terms of the forex risk and the treasury team coming into play, any insights that you have to share with our students in terms of the tax aspect?
Yeah, sure. So the thing is now, as Indonesia and Jashika, everyone mentioned the company is it was in a position of the reactive. They are not in the positions of the proactive. For tax, then for that perspective, being a reactive, then what are the tax compliance damages now which they have, we need to look at. Now I will start not only from the forex side but also from the key operational issues which they have, and Sir and Ms. Ashika explained, which is when it comes to the macro factors. Actually we cannot take the tax decisions based on the macro factors because it's uncontrollable. Then even the fuel prices, it's hit to the profit, but for tax we cannot do anything.
You can't do any tax planning.
Any tax planning, no, that's already happened. And again, when it comes to this warehousing issue, and when it comes to this penalty with the government, and again this environmental authorities with this emission and all these things, it already happened. Then the tax implications, it is there. Obviously, this cost which it's embedded in the income statement, then those are not, for our technically terms, it's not allowed to deduct. It's taxed then at the 30%. Now, not only that, as mentioned in the reputational damage, not in the other risk, but also they have the tax compliance risk, the additional tax burden they have already incurred on these things. Then if this kind of the big picture it is there, the students can again the link this tax perspective and integrate to their answer, and they can write already, because it's not only this risk but also the additional cash flow out due to these operational issues. Because in the tax we are always looking the if there are the expenses, is this expense is a voluntary or these are involuntary losses. But in this law it has explained only expenses. Then expenses, it should be incurred for the production of income, and none of these expenses not incurred for the production of income, as Sir correctly asked whether these expenses need to incur. That's the question. Then already incurred, then therefore there is a particular another section to tax these things under disallowable expenses. Then obviously company has that on these operational issues, they are already with the additional tax burden. Then when it comes to now your question, which is on the forex, which is on the foreign currency fluctuations, then in the law itself the regulations are there, the provisions are there. Then students need to look at, it's totally the tax is going with the financial statements. Then in that they have to very clearly recognize what is the foreign exchange gain or loss, which net figure which has charged to the income statement. Then in that context they need to again evaluate out of that particular figure what should be realized, what should be unrealized. Then not only the provisions of that, by elaborating these provisions of the Act and what should be the exchange rate which we need to take up to that level, the Department of Inland Revenue has issued a particular public ruling on this matter, because for that much this is applicable and practical. Then therefore the students should very keen about this, what are the gains out of this and the losses out of this, what's realized, what unrealized, and we have translation and transaction. Then in these things, when it comes to this fuel thing, transaction already happened, then it's the sum, then in that context it's a realized. Then again in the company, it may when it comes to this, the foreign currency bank accounts, foreign loan, then translation risk is there with reference to the foreign currency. Then in that context, that part, it's not, we cannot take into the tax, because if it is a gain, it cannot be taxed. Like that, there are concepts. That particular concepts, they have to analyze the financial statements, probably in the comprehensive income statement. Then in that, they have to identify what should be the transaction included in that forex gain or loss. Then we have to divide that transaction based on, they need to do a deep dive on that. And that's on this forex and few operational issues mentioned.
No,
I think now sir is so happy. I think sir
I'm
is so
waiting to
happy.
ask you a question, right?
Yeah.
You are a tax practitioner, right? Did you
Yeah.
learn financial reporting?
Why not? Then it's,
What is the
you've
accounting
been,
standard?
it's a case 21 if it is not mistaken.
So, yeah, don't say that. No need
Then
to-
you've been one of my lecturers.
Now, what you spoke about spot rate, right? The transaction as it happens, there is a P&L, right? Exchange gain or loss.
Yeah.
And then at the month end, the monetary assets are valued, right? So
Yeah, it's a
what you
translate,
mean,
yeah.
that those are that difference. And also you mentioned any other thing which is parked in OCI as a
Yeah.
currency expense.
Comprehensive
So those things you have to really see from a tax perspective what is realized and what is not realized. That's
Yeah.
the area probably they can.
Probably they can.
Will you share that particular note if you have?
Yeah,
so
the-
we will post
in
it
my,
to- Because
session-
now case study means they can't relearn, no, they have learned tax also, but this is a quick recap of how they want to connect. Yeah.
Now the separate sessions I'm going to
You are
do,
going to touch that.
Yeah,
Excellent.
then I
Great.
will do.
Sure.
And when it comes to this OCI thing, that for
Yeah.
no tax perspective.
That
because-
is not
Yeah,
real.
no, it's not there.
Yeah, because that's where even if they are doing hedge accounting through OCI, they park those things that you have to understand the tax implication. What according to Nayananjali, those unrealized things will not have a tax implication.
Tax implication because we are looking for profit before tax for
Yeah.
computation perspectives.
All right. That's-
Thank you, Ms. Ananjali. I think the students are waiting and looking forward to that deep dive session as well with you.
So you have to work out some examples and show, right? Right.
Geez, one more thing I wanted to add now. I think the pre-scene has given certain indications of the forex rupee dollar rupee where it would stand over a period of I think 1.5 years. So it's very apparent we operate in a country like Sri Lanka which has a soft currency, and we always have to bundle up with a hard currency as dollars or GBP. Now in this case I think all the oil barrels will be priced at US dollars. What we see as the depreciation over the 1.5 years is closer to about 5 to 6%, and that's something I don't think a company of this magnitude should take it as light, right? So that's why I wanted to add, because it's a very important fact, and essentially and historically company proves to be reactive to the situation. So from this point onwards, at least, even with or without the Treasury Department, they should look at a more I think open manner into this global, because now it's not only Sri Lanka, there's a global crisis that would probably come up in different ways. We have seen about 2-3 different types of wars coming up across different regions, so anything can come up, right? So just to give a heads up on that for the students.
Moving on to the final segment of our case study interpretation, we'll be looking at the ESG commitments and the sustainability aspect that is disclosed to us. So my question will be directed to Mr. Indranil. We see there is a lot of regulation with the IMO emission rules and also the EU carbon taxes that are impacting Hayward PLC. So in this context, can you explore whether the students will be tested on sustainability reporting, and if so, how can they build an answer that will add value to them?
Right, thanks Jees. I think that's a great place to end this conversation. So basically students, to directly answering Jeesa's question, I would say now this year we are in 2025, year where sustainability reporting is mandatory for listed company, top listed company. So I stress at the start that most of the companies are really struggling now for the first standard, which is climate risk, right? S2 standard. But you can't just do S2 without applying S1 standard. And again, I have a specific session recorded for 2 hours for you to really navigate IFRS S1 and S2, and after that probably we can I can probably propose some questions where you need to prepare. So this area you cannot exclude students, because the entire country, right, all the companies are really worried, because it's not only top 100 from 25 to 2030, right, during next 5 years this will come to all the companies including specified business enterprises. So regarding, I will but only take now maximum 10 minutes, right. Now if you look at whatever we have been talking with Professor Ravi, right, and Yashika and Nayananjali. So one thing that Professor Ravi as a case study expert, the idea was that don't look at in isolation. So it all connects with strategy, and I explained that strategy has to be governed. That's where the governance comes. And then you need to assess risk and measure what matters in measuring, and that is how IFRS S1, the base standard, has these 4 components which you can see. The governance, totally from a corporate governance perspective, is there a need for a ESG committee? At a board level, IFRS S1 asks about 5 tough questions from the board. What is the board structure? How board is going to get information about emissions? SRRO, sustainability related risk and opportunity, whether board has the knowledge, whether it is connected to board, the emission, for example, managing your scope 1, 2, 3, and if you have a net zero target, are those connected to board remuneration? Those tough questions are there under governance, right? Whatever I mentioned, see here, is it part of the board terms of reference? Do they have the skill? Are they meeting to discuss these matters? Are they connecting SRRO? If you don't know about SRRO, we cannot talk about sustainability related risk and opportunity. Again, in 1 minute, the SRROs are those that's going to impact the financial prospects of the company, right? So that is access to cash, right? Likewise, how you connect with the financial statements from a risk perspective. And then we have one standard which is S2, right, which is only talking about one big SRRO which we call CRRO. So if I ask you to analyze what are the CROs of your case study, you should be able to talk about physical risk, right? For example, are they going to be affected by extreme flood, weather patterns, and how the distribution of goods can be affected, things like that, and transition risk. So again, coming to S1, it begins with the governance, the board of directors, how they oversee SRRO, as well as the first standard, right, which is, now if you take this case study, I think Jisa mentioned about, now you can Google and ask, right, what are these IMO, what you mentioned was? IMO, now that is International Marine Regulations, right? So that if you are in international water, these regulations are applicable, right? So therefore, this is S1 standard is about, I would say, risk management standard, right? Why? Starting from governance, you are going to look at how here the strategy means what is your strategy to manage your SRRO, right? And then what is the risk management process where you systematically manage it, and how you have set your targets. Example of target is, now you can go to the relevant page number and see what is their carbon footprint now and how are they going to bring it down. So there is no shortcut. You need to understand the governance, strategy, risk, targets, and the essence of the standard. So we will immediately upload the video, 2-hour video. Please watch that. That is investment for future, whether it will come in exam or not. The other important thing that really matters is to understand scope 1, 2, 3 emission, because in terms of S2 standard, if I just shift from S1 to S2, right, this is the first standard applicable in Sri Lanka, right? There you can see the same structure I am having here, governance, risk strategy, and metrics and target with the word CRRO. Then I mentioned to you what really CRRO means. Now this is the point I mentioned. Now regarding board of directors, there are 5 questions in the S1 standard, right? That is all start with how the responsibilities of the governance, this is even there in the listing rule, whether you have a policy for sustainability, do they have the skill, whether information come into the board, and then how they connect this with the strategy. Now if you look at this whole case study, right, now professor mentioned they are in 3PL, which is heavily asset loaded. If you shift from 3PL to 4PL or 5PL, you might also reduce your carbon footprint. That may be a strategy to reduce it. And then about those international regulations, when you navigate right into different businesses, how you are going to increase your carbon footprint. And then imagine in terms of risk, huge SRROs in this case study, release in wastewater, right, violation of laws, those are also connected to ESG risks. So another word to discuss this matter is ESG. So student, this is the risk part that I explained to you. As far as this case study is concerned, you can go through annual reports of JKH, Aitken Spence, right, and those you can see how they have analyzed. The transition risk means you are getting to what is their plan to cut down. Now, I think last para in the case study talks about sustainability, the plans they have given, right? When they transit, for example, they haven't made clearly whether they are going to net zero or not. But in terms of international market, are they going to be subjected to any taxes, any regulatory requirements? Those you need to look. And more specifically, this, like I said, there's a separate session. I don't want to make this is a very heavy session, but the last but most important thing is accounting for carbon emission, where you have to understand in this case study, students, the first thing board also should understand the carbon footprint. Scope 1, Scope 2, Scope 3. How are you going to account using greenhouse gas protocol standard? So there, if I just ask you basic knowledge, right? Please write down, this is very fundamental. Scope 1 is what you burn. Now in this business model, if they use their own feed, the fuel it consumes is Scope 1. So how can they reduce Scope 1 emission? Then what is Scope 2? The fuel or electricity that you purchase, that is Scope 2. Then if you look at Scope 3, that is your whole value chain, which is very complicated. There are 15 categories of Scope 3. Now imagine when they are into the, very much they use fuel, right? Now what is Scope 3 is to look at carbon emission beyond your value chain, right? So for example, now when it comes to mining, that is, now if I ask you Scope 1, 2, 3 in this business, what do you think which is higher, Scope 1, 2 or 3? Now if their bigger part of the value chain is to use fuel, right, even in that mining and extraction process, the emission that is generated is part of your value chain, right? So those are Scope 3. So largely in this type of industry, about 70% or more is Scope 3 emission, right? So how are you going to control Scope 3 emission? And then how do you account for this, right? So that is where, even if it is a group of company, right, with that acquisition, probably if it is an e-commerce company, their carbon footprint may not be high, but we need to look at the value chain and assess. So therefore, students, this is an area you cannot skip, right? This is what I said. These are the types of emissions. Now specifically, they have mentioned about sulfur, right? If you Google that IMO regulation requires, if it is a ship, right? So the content of sulfur in the fuel, right? That if it has exceeded some limit, you know, that leads to the environmental impact, and that is regulated. So when it comes to reporting emission, if you look at emission calculation as an accountant, now you are going to account for emission, all of this is converted into one, right, under greenhouse gas protocol corporate accounting standard for reporting purpose, right? You have to use the emission factor, and that there is a bit of calculation, right? But all of this may not be tested in the exam, but having the basic knowledge. I mentioned to you company what you burn, what you purchase, Scope 2, Scope 3 is indirect emission, right? That is even your employee business travel, right? The waste disposal and outsource activities matters. So finally, how this can impact. Imagine if there is an exam question that this year they are top 100. So the first standard that is applicable is S2 standard, and then not only institute, globally as well as institute has given a lot of relief. You need to be aware about those relief. Specifically, these are called transition relief, right? So the first year you need to report only climate related risk, and then in addition, right, there is exemption for Scope 3, which is a complex one. So there is a period you can defer. The first year you don't need to report, and then if you, there are a few exceptions that you need to be aware. Now you are recommended to use greenhouse gas protocol, but in the first year if you have a different measurement basis, that is allowed. So then another challenge, if it is a group of company, how are you going to consolidate emission using different methods? You need to have a basic understanding. Don't ignore this area, because now this is married to IFRS. So what I recommend, we will upload this video that I have done on S1 and S2. Please go through that immediately and start connecting, right? You don't need to stop now. Don't think that you have to stop everything and learn in S1 and S2, but but just to be aware that how it matters as a strategic priority to reduce emission, right? The fact that they are into international business, the regulations matters, the fact that they are in Sri Lanka now, IFRS is mandatory, how are you going to start implementing S1 standard to set up your governance process, risk process, and then when it comes to S2 standard, how are you going to identify your climate related physical risks, right, transition risk, and finally, how are you going to account for scope 1, 2 and 3 using greenhouse gas protocol. I know it is very easy to say, but when you really practically look at it, you have to study this in little detail. I think Geesa, over to you. I think we gave a good coverage. I'm sure she will do a good summary. And what is coming up is very, very important.
Indra, where's the pen? Okay, thank you. Hi. Thank you, Indranil, for that very comprehensive explanation on what students can expect in the exam in terms of sustainability related question and also how to approach in a more value adding way. So with that, we have actually come to the end of this episode. I would like to offer my heartfelt gratitude on behalf of Infinity Learning Space as well as our students to our amazing panelists, Sir Ravi, Ms. Yashika, Ms. Nainanjali and Mr. Indranil. However, following this session, we also have a series of sessions planned throughout Following this session, we also have a series of other sessions planned throughout the month to help you crack the case. Expanding from tax to strategy to financial management, and also an industry expert session exclusively brought to you by Infinity Learning Space. So please make sure that you register to unlock the entire masterclass series. That will help you crack the case and guaranteed exam success.